What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, the people's champ of Wall Street, Dave Bartosiak. And today, my friends, it's the good, the bad, and the grizzly. That's right, I'm very grizzly Adams today. Say bye-bye because it's time to trim. It's like a spring cleaning. A few months ahead of spring, but that's okay. Lots and lots of condors to talk about here, so let's start trudging through this. First, Iron Condor on Constellation Brands, ticker STZ. Short the Jan 19, 235, 240, 222, 15 Condor for a 238 net credit. So we're doing a little bit of a review of what happened before. We talked about this a lot in the chat and in other videos. Max profit with Constellation Brand between that 220 and that 235. The spread ended up closing with, Constellation Brands ended up closing at about 218.18 last week. So essentially, if you held it all the way to the end, you had a small win. You cashed out for $1.82 after taking a 238 credit. Now, here's the thing, and the reason why I don't like doing multi-leg strategies in this GBU is because we know that over time, there's opportunities to close out one end of these and then get out. So this is a good learning point. If we were in a condor and it jumps, in this case, to the downside, you should immediately close out that downside, because what's happening is the put that you're selling, in this case the 220, has some implied volatility in there, but not as much as that 215 will have. So there's a lot of juice in there immediately following the earnings as the options price in the potential of that stock continuing to go down. So immediately when it goes towards the edge there, you should just cash it out basically that day. And what you're going to find happening a lot is you're going to make a small gain or get out break even immediately following the report. There's no need to wait for the time to go by and let it kind of bounce around and get closer to the middle of the range. So if it looks like you're going to take an L, take the L right away, and that L might actually be a W. So there was Constellation Brands. Then we had Citigroup, short Jan 19, 77.50, 78.50, 74.73. Condor, 57-cent net credit on this one. So max profit with Citi between 74 and 77.50, a very tight range indeed. Well, on that Friday, Citi ended up making a move up to 78.31 to close. So had you held it the whole time, you would have taken that small loss there. So again, when you're doing these condors, if it starts to go against you, close out the end that it's against you, let the rest of it run, and you're probably going to end up being okay. So something for the future. We've already talked about this, but just showing you if you hold it, what ends up happening here. Then Netflix. So we did the same thing. Iron Condor on Netflix. And inevitably what happened is we were short this Feb 9th, 217.50, 212.50, 237.50, 240 for $1 net credit. Okay. Now, max profit with shares of Netflix between that 217.50 and the 237.50. The spread was basically at 240 right now because we kind of blown through the upside because Netflix is all the way at 270. This was a risk we knew going in. We said Netflix is either going to not move at all or it's going to move 15%. Guess which one happened? The 15% move. So that's all right. That's kind of what we knew heading into it. And we come out relatively unscathed. Yeah, we took a small loss, but it's not as much as a loss as this. We had a directional bias on it, and it didn't work out for us. So just close it out, take the L. And again, because you have a little bit of implied volatility, even on the call side, that's why it's not all the way at 250 right now. You're not taking the huge L. Then we've got another Iron Condor on JP Morgan. I told you we got a lot of condors that we were doing because I want to show you guys how these behave with different types of stocks and in different market reactions. So this is short the Feb 9th, 113, 114 call spread and 108, 107 put spread for 58-cent net credit. Max profit with JP Morgan between that 108 and that 113. So you're trying to jam it in that range. Well, the spread right now is trading about 70 cents with JP Morgan at 115.40. So what do? You just go ahead and close out the call spread. You're going to take a small loss. It's going to be 70 cents, but you took in 58, closing out for 70, a 12-cent loss. That's nothing in the grand scheme of things. And if you can keep doing that consistently, where your loss is only going to be a 12-cent loss or a dollar loss or something like that, and then your victories are going to be much bigger over the long run, you're going to end up making some money here. Then the bullish call spread we had on Las Vegas Sands, ticker LVS, long the February 16th 77.80 call spread for $1.30. Max profit with LVS over $80. Well, right now the spread's trading at 91 cents with Las Vegas Sands at 76.42. So for this one, we're just going to go ahead and hang on and hopefully allow the market to start creeping in our direction. Then we had a bullish call spread on American Express, long the Feb 9th, 100-103 call spread for $1.29. Max profit with AXP over 103. Spreads trading at 79 cents with AXP right there at 99.50. I'm hoping we can hold on to this one, and the next little push is going to push us on through that $100 level and into the stratosphere. All right, folks, I do believe that's all I have for you here today on The Good, the Bad, and the Ugly with Zach's Live Trader. So thank you so much for hanging out with me today. Remember, tomorrow we've got the morning after with Starbucks, so keep your eyes peeled for the link early in the morning. That show is going to kick off at 9 a.m. Central. Thanks so much again here from Live Trader. I will see you all mañana. Have a good one.
Find yourself living in a shotgun shack, and you may find yourself in another part of the world, and you may find yourself behind the wheel of a large automobile, and you may find yourself in a beautiful house with a beautiful wife, and you know, you may say to yourself, well, how did I get here?